Hello and welcome to the Banker's Tech Talk video series. I'm Joy Macknight, Deputy and Technology Editor at The Banker, and I'm joined by Urs Bolt, founder of bolt.now, a fintech, wealth tech and regtech advisory firm. Urs, thanks so much for joining us today.
Thank you for having me here.
I know you're looking a lot around the smart economy. Can you explain what that is?
Yes, of course. I just recently wrote an article about it and also gave a keynote in Bangkok. So Thailand 4.0 is what the government aims, and smart economy is anything is connected, people, things, as we call it, Internet of Things, or soon Internet of everything, connected, business, people, and that's basically where we aim for. So we go into a networked economy.
Okay.
In a very simple way.
And how can banks take advantage of that? You know, how can that impact their business model?
For banks, that will probably be, for many banks, it will be a big challenge, because as we will be more and more freelance-driven, gig economies, short mandates, maybe even seconds, we will have many more transactions on the micro scale, microservices, which need to have a value exchange and an exchange in terms of a currency. And that's where obviously then where crypto currencies will play a role as tokens, and for banks that will mean a fundamental shift, not only of the operating models, I believe, but also of the business models, which I'm sure we can talk about in a minute.
Well, that's what I was going to say. So we'll talk about cryptocurrencies also a little bit later.
Yeah.
But in terms of the banks, you know, what are the big challenges for them to take advantage of this sort of new networked economy?
I think the challenge is that banks are integrated today in one value chain. They produce everything, they distribute what they do. And in the new world, it's all in a disaggregated way. So currently, we see all the trends towards platform economies. We take always the same examples of the big tech, Amazon, or look at China, where they're much more ahead than we are, because banking is already on the platforms. And the banks, only few of them are still firmly integrated with the end user. So for the banks, it will be first about to flexibilize their legacy infrastructure. And the tech is one thing, the legacy tech. It's like 5 generations back to the 70s for most big banks. And I think that's going to be one of the biggest challenges. The other one is obviously also change, the mindset and the leadership culture, and how will you suddenly become an agile enterprise in this new connected, networked world, especially when you look forward into a network economy, which some call blockchain economy, or I also call it a smart economy.
Okay, and I know you're doing some work around digital identity. Can you explain a little bit about what you're doing?
Correct. I'm an advisor ambassador for Pixio AG, which is a Lausanne, Switzerland-based or headquartered company, and we work on solutions which help the banks to flexibilize the personal data for KYC, onboarding, and one of these examples where they now implemented is at BNP Paribas. And you see that big banks which understand what's ahead of them, thinking ahead 5, 10, 15 years, they have to start now thinking about how can they actually deliver services in an open banking context, which is more towards platforms, and in the future into a network economy. And you need to make what we often call as bankers static data, client data. You also need to flexibilize this to make it reusable for your partners which still bank with you. That means businesses, it could be a telco, insurance companies, and that's exactly what the banks who think ahead now start working on.
Okay. My last question is around the cryptocurrencies. You know, what kind of impact do you think cryptocurrencies like Bitcoin, let's say, is going to have on the real economy?
I think overall it will be fundamental for smart economies and blockchain economies to work. But to really make it a success, we need now use cases which build on distributed systems, distributed ledger, decentralized, and then have actually a representation of the service in token form, which then also needs an exchange of value. So you have again a currency which is used to basically pay for a service or a product, and that needs to go hand in hand. So there are two sides to look at. One is the developed world, where we all here in London, Switzerland, etc. We will obviously be able to optimize our way we live and our lifestyles, but also how businesses function. But think about hundreds or billions of people who could benefit from this new way of exchanging value on micro levels, that they could actually be financially included. So financial inclusion, in my view, will be a huge driver for these new technologies, because everyone now has a smartphone. Even in Africa, we know it since M-Pesa, they all have smartphones. So if you equip them and help them to use a crypto wallet instead of a very expensive and time-consuming onboarding process for a traditional bank account, I think we will see a lot coming in the next 5 to 10 years already.
Excellent. Thank you so much for your insights, Jurs.
Thank you, Joy.